Good evening, everybody. You guys know it's Special Joseph. We're here trading the markets, option classes. Everything here is for educational purposes. So nothing is a suggestion. So let's see what do I have. So I wanted to talk about today. I want to talk about a little bit about the market, state of the market, and then also what is a good setup versus a bad setup, and what is a safe entry versus an unsafe entry, so we can maybe nail some of our executions. All right, so let me just start off with just talking about today. Let's see what spot. Today was an interesting day. I feel like every day is an interesting day. All right, so you guys can see on this website the sectors. So the market actually closed a little bit red today, but there was a lot of back and forth in the market. You can see the energy at one point was green. It ended up being one of the bigger losers of the day, and you can see pretty much all the sectors were down except for consumer discretionary. All right, so now let's see what that looks like on the chart. You guys still see my screen?
Yep, we can see it.
All right. So as you can see, today's it was pretty much a doji, which means that the swing was up high at one point, it was down low at one point, but it finished in the middle, a little bit lower than where it opened from. So what we're gonna do, we're gonna break this down and see what happened today. And I'll show my lines. I'll just take these off real quick. Right there. All right, so as you guys see the levels that I had. We broke outside of this channel ever since Friday. And I mean, yeah, no, this is Friday. So ever since Monday, we completely broke out. No, that was Friday because today's Tuesday. No, today's Tuesday. Sorry. Long weekend. So today's Tuesday. So Friday was the green candle. So Friday we broke out of this channel. And it was really crazy on Friday because in the last hour of the market, so let's go to a small time frame. Let's go to the 1 hour. All right, so each one of these represents the opening of a day. So you can see Friday was a big green day. We broke out of this channel and we continued running all the way to the last hour where you see things really kept pushing. We go to the 30. So you guys can see what happened on Friday. And then Tuesday, so this is Tuesday. Right here, yeah, this is Tuesday. So this is what happened today. So you see today, so though Friday was a trending day, today was an inside day. So it was very choppy. It was very choppy. So it didn't really go anywhere. All right. But the interesting thing is this, if you look at the SPY, you look at the monthly, because you always want to look at the large time frames to see what's happening on the larger scale. So you can see right here, the month is barely green. So the month was red. If it wasn't like last week, we would have had a red month. But today's the last day of the month. So this month is actually going to be closing green, which is significant because we came back from so much red. So that's just something to notice. Then I want to show you guys this. Hold on. Did anybody see Biden talk to Powell?
No, I didn't see it. What happened?
Yeah, so I don't remember what time it was. I think it was around like 11 or 12. I don't know, but he spoke to Powell. And if you notice, the one thing that Biden said is that I'm giving the Fed space to do their job. It's not my job to oversee them. And it's important for me to give them the space to do what they need to do. So basically, if you look at it, this headline, Biden and Rare Powell seeks to deflect inflation blame. So he's already putting the blame on Powell and setting it up so that if they do fail, it wasn't his fault. Why? Because it's midterms. So that's something for you guys to notice today. If you guys seen that. In other news, anybody care to read this?
I'll read it.
All right.
OPEC weighs suspending Russia. OPEC. OPEC weighs suspending Russia from oil production deal. Some OPEC members are exploring the idea of suspending Russia's participation in an oil production deal as Western sanctions and partial something.
And the next one.
Oil turns negative as OPEC eyes Russia suspension from output deal. Oil prices turned negative on Tuesday after a report that some producers were exploring the idea of suspending Russia's participation.
So OPEC, right? So OPEC is the oil, petroleum, something cartel. So they basically are the biggest oil cartel of the whole world, and they decide how much oil is released into the world. So they kind of have like certain what do you call that, quotas that different countries have to meet. But now that they're suspending Russia from OPEC in different deals, now that in some ways that's going to help Russia because they won't have to hit those quotas. So that's basically what they were going to go on and talk about. But because of this, you'll see that in the morning, oil was up. Like MRO, one of the stocks like I've been championing since like last year. They hit all-time highs of about $32 today. Like, let me show you guys oil. Like, it's pretty exciting because you know, I haven't driven a little bit because I don't actually have a car, so I had a rental this weekend. And yeah, I see why you guys are complaining about gas prices. I see it. I was not. Yeah, I didn't know it was that bad. But let me go to MRO. All right, let me share my screen. Yeah, I played them today too. I made more money on the put than the call, but still. So as you can see, it's been having an amazing month. A lot of amazing months. But this is today. And here's what I want you guys to notice, right? Because I actually played this today, and I could go into my my analysis on how you can play some of these things. So this is the daily. So as you can see today, MRO opened up, it gapped up. It opened up at 32. It hit a high of 33, 33.24, made a low of 31.18, and it closed at 31.44. But here's the interesting thing. So now let me go to a small time frame. Let's say I go to the 15-minute time frame, and you guys see that gap? You guys can see it?
Yeah, was that the open?
Yeah, that was open. So now understand this, right? When something opens like really, really high, it's already overextended. So then if it starts to, if you notice a gap, right, and it starts to close that gap, a lot of times it will close that gap. I mean, it can also fill, but you can, basically what I'm saying is that once you see it start to actually close that gap or wants to close that gap, you could target the gap close. And it came pretty much really, really close. 90% closed gap. You know what I mean? So if you see this, right? I mean, so mind you, so these are 15-minute candles. So you gotta wait to see what direction the day is going, because this could have kept running higher. But once you see that it's starting to close that gap, you could think in your mind, gap filled. So now all you're thinking about is how can I enter this where it can fit, where I can safely enter and it can fill the gap. So if you're patient and you're waiting throughout the day and you find out where the support is at, which is right here, we're at 31.93. As soon as it breaks that support, that could have been your entry to play the gap fill. Does that make sense to you guys?
Can you repeat it?
Can you hear me?
Yeah, I can hear you.
Okay.
Yeah. So, all right. So let me move this line up just so I can show you what I mean.
Can I ask a question about that?
Sure.
So the play would be from 32,
Uh-huh.
and you'd have to get out around 30, not even 32. You said at the end of that candle, that's so from 32 to 31.50 if you're lucky.
17. Yeah,
Right.
31.17.
So that's going to be, so you're talking about less than $1 on a $30 stock, right?
Mm-hmm.
So would you, what kind of play would that be? Is that an option? What kind
Yeah,
of
option. It'll be an option play.
So what kind of move would you get on the 90-cent move in the $30 stock? What kind of move would that be?
You get a good move. Actually, yeah, let me see if I did it today on my demo. I think I did. Hold on. Give me 1 second. So I could actually show you. Where is it? I'll show you this way. I'll go on the website so you can see the numbers. The option profit calculator, it's a good website to just play out scenarios. So.
And that's assuming you get in and get out at the time that you want too, right?
Yeah. But you can make a good amount of money. The good thing about options is that you don't need much, like $1 on $30 stock. That's probably like 3-4%. That's enough to make a good, at least 70%, I would estimate, but I'm gonna plug it in. Long put. So let me share my screen. So this website right here, I showed you guys before. You could just plug in the option and the price, but you would need to know the price. So let me see. Let's say I put in MRO. And you see it's giving the price right now. So another website where you can actually look at the past prices is this website right here, barchart.com. And you could look up historical prices on options. So you go to option prices. You guys still see my screen?
Mm-hmm. Yeah.
And then, so you select the expiration. So let's say I select the expiration this week, because if I see this morning, I'll play this week expiration, just because it has the shortest amount of time. Yeah, I know the move is happening quick, immediately. So then, so we go on the chart, right? We go, you guys see the chart still?
Yep.
So if I'm playing this break, 32, I could target this, $31 area or even $31 put, because at the end of the day, as long as it goes in my direction, I can profit on it.
Right.
So let's say I pick the $31 put expiring this week. So I go to MRO and I go to the $31. So calls right here, I go to puts, $31 put. And then right here, I select option price history. It's gonna give me the history of this option and like the highs and the lows for today and where it's been. So you can see,
good.
yeah, so you can see, and even compared like other days, so you can see back on 19th, this option was going for 500, but then you see that it dropped to a point where today it opened at 20. So if you caught it at the open, you could have got it at 20, but let's say you caught it a little bit later, maybe you paid 30, but it made a high of 60. So if you caught a little bit later, let's say around $30, you could have made 100% today if you sold it.
Okay.
All right.
That's a good return, yeah.
So that's the beautiful thing about options, is that with less money, you make more. That's what I love about it.
Yeah, totally. But again, timing is everything.
Yeah, timing is everything, because going back to the chart, you'd have to get in like right at a good time. Cause like you can even play earlier, like earlier entry too. Like if you favored the down and you favored it, you could have gotten it at any break of support, you could have gotten in like right here. If you seen that as a support break-in, you could have gotten in and played your risk. Cause at the end of the day, it's all about how much are you risking. It's how much are you risking. So if I get in right here, now I have to decide how much I'm gonna risk. I'll probably risk up to this red candle right here. If it went back the other way and it went up past this red candle, I would have got out the trade. But if I got in earlier, now I can risk up here. You know what I mean? So it just kind of puts me at a shorter risk level. But
Yeah, the problem getting in up here is back where you were, but getting in up here,
Mhm.
looks like it's about to make a run up as opposed to a run down.
Well, you'd be waiting until this happened, until it broke it. You'd be waiting
You would
until
wait,
it actually,
okay,
yeah, you'd
Yeah.
be waiting until it actually broke
Right.
structure.
okay.
Yeah. So the main point of the game is to wait.
I know.
Yeah, because this happened to me today too. Like I made money on the way down, and then so I got out right here, like from the beginning. Then I tried to play the up. So thinking like right here, thinking that it was gonna continue, like thinking like I seen this, thinking, it's probably gonna
Right.
continue. And then
Yep.
boom, and then it broke structure.
See?
And then I got
Yeah,
stopped out. But
that's
it's
the
good.
thing.
But
They
it's
really
good.
whipsaw you.
Yeah, today was really choppy today. So it was not really the best day to trade, to be honest. Or I should have waited to at least stronger direction. But I still
Yeah.
traded this. But I did have some good trades I could show you guys. Hold on. Where is it? And well, the main thing is I want to show you guys examples of trades. But before I do that, let me just finish this up. All right. Oh yeah. So this is important. So this is happening tomorrow, guys. The Fed's doing quantitative tightening. Does anybody know what QT is?
QT.
Quantitative tightening.
That's what they, oh, okay, so let me see. Can you hear me okay?
Yeah, I hear you.
So that's when they keep increasing the rates?
Not necessarily increasing the rates. They stop because every month the Fed buys bonds from the government every month, something around 120 billion per month. When they do the tightening, they stop buying as much bonds because them buying the bonds is keeping up the economy is in many ways. So once they start doing that, now it's on the economy to regulate itself more so than them. Does that make sense?
Yep.
Yeah, so they're tightening because they might bring the budget from like 120 billion a month to like 50 or 80 or 70. Basically, it's going to be a drop off, and the economy feels it. So now, in order to do this balancing act and rein the economy and rein inflation, they will eventually have to increase the interest rate. Does anybody not understand why increasing interest rate lowers inflation?
I don't.
Okay. So you got to think about it. It's like they're trying to control the supply of money. When there's too much money in the economy, that the price of things fall because it's too much money. You know what I mean? So the money becomes worth more and more worthless because it's too much of it. So in order to reduce the money supply, they charge interest rate, because when the interest rate is cheap, everybody wants to borrow money because it's so cheap to borrow money. Therefore, there's a lot of money in the economy. But once they raise the interest rates, it becomes more expensive to borrow money, thereby reducing the amount of money that's in the supply of the economy. Does that make sense?
Yes, that makes sense.
Yeah, so that's why they're trying to reduce the interest rate to try to settle inflation while they're doing quantitative tightening, which is another balancing act, which could really affect and throw us off.
Why don't they just stop printing extra money?
Most of the money out there is not actually even printed. That's the other thing.
That's true
Most-
too.
Mhm. But they do just keep printing money. So by them raising the interest rate, now it's gonna be less money being printed.
Okay.
All right, so I want to talk about entries and safe entries and good setups. So here's a little checklist you can use. It all depends on what kind of trader you are. A lot of times I scalp. Scalping is when you're trading in and out real quick. You're in there for a couple of minutes to a couple of hours, but you don't stay there the whole day, right? You're not out of the trade by the end of the day. Swing trading is when you hold the trade overnight. Once you hold it overnight, one night, it's automatically a swing trade. Long-term investing, that's when you're buying stocks that you're gonna hold for years and whatnot. So this is like, listening to indicators. If you use indicators, you could write the indicators that you use. And then the main thing is your confirmations. What are your confirmations, your confluences to make you enter and exit trades, both on the bear side and both on the bull side? You want at least 3. I usually like 4 or 5, but no less than 3. So now let's look over some setups and why they were good setups. So one setup right here. So this is a setup of SPY. This was from the 27th. So that was like that was Friday. Okay, so this is so the last candle was the end of the day, Friday, right? So now, looking at this, does anybody notice anything, any structure, anything at all from this?
There's a lot of gaps.
It's a lot of gaps. Do you notice a candlestick structure? Anybody see a
This is-
structure?
Yeah,
Gerard.
there's some bearish engulfing candles.
Yeah, that's candle, but what about pattern? Candlestick pattern. See any patterns? Oh, you guys see this right here?
Double top. You mean double top?
Is it an inverse?
This right here. Yep.
Head and shoulders inverted.
Yep. Exactly. That's my favorite. Guys, this is my favorite pattern to play. Why? Because it has a very high success rate and it's very simple to play. So, anybody know how to play this? Anybody want to explain?
No, go for it.
All right. So remember, there's a head and shoulders. You can see the shoulder line, right? So, but after the shoulder line, there's something called a neckline. So the neckline is under the shoulders. So for example, from here to here is a neckline because it's underneath both the shoulders. I could also say from here to here is also a neckline as well because it's under both shoulders. But this one, the first one I drew is safer because it's clearly underneath both shoulders. The other one is still underneath both shoulders, but it's not as clean. All right. So all you do is you play the neckline. So let me erase one of them just to not confuse you guys, right? So you play the neckline. So you look so let's say so first of all, there's many ways you can enter this, right? But you have to see what's going on. Like, so if you realize it was a head and shoulders from here, you could have tried to play this trend line because you see it's on this trend line. You could have been playing this trend line from here, right? You guys see what I'm talking about? You guys could have been playing the trend line itself. You guys see what I'm talking about when I say the trend line?
The uptrend.
Yeah, but there's also a line of support right here. It's a trend line.
Mm-hmm.
So it's always safe to enter near support. Once you have strong proven support, it's always safe to enter on support. So that's one previous entry. So if I was early enough, I could be like, okay, this looks like it's starting to be a head and shoulders and it's on the trend line. I could enter it early. Okay, let's say you missed that, right? You missed that entry. So now you see this is forming a head and shoulders. So now once you see that it's approaching a neckline, and not only is the neckline, it's also resistance. So it's a resistance and it's a neckline. So that's two confirming of why it's a key area. It's a very key area. So once you break this and you get bullish confirmation, that can be your entry. To be even more safe, wait for the retest. So you can either enter right on this candle, right? Or you can wait for the retest and enter right on this line. So this how I rate it. The best entry is this. The best entry is once it breaks this line, wait for it to come back to this line and then jump up again. Right? The second entry is as soon as it breaks that line, get in. Put your stop loss under it, get in. Any questions?
Where did the stop loss go?
So if you got in right away, you just put your stop loss right underneath the previous candle. Right here. Yeah. If you got in
Right. So do you have these charts already on a screen that you're just looking for these chart patterns? Or did this just happen to pop up and you're like, oh, I see head and shoulders? I mean, how do you even, I mean, are these like your regular, do you have like 7 or 8 stocks you're just always looking at and to see which ones are having the patterns that you like?
So as you can see right here, these are my top stock list. And while they're forming in real life, I'm looking for patterns. And then from previous days, let's say the day's over, I'm looking at patterns, you know, and you could see a lot more on the small time frame from the gaps and what's happening from day to day, because every one of these white lines represents the beginning of a day.
Like so this is the daily? This is a daily chart?
No, this is a 1 hour chart, but you see like the solid vertical lines. Those are where I separated the openings of the days.
Oh, okay.
Yeah. So that's like Friday open, Thursday open, Wednesday open. And
right.
So, yeah. So
this is which is the chart that you're watching now? What is it?
This is SPY. This is SPY. I'll even go on it so you can see it like live. I'll even go on the regular SPY chart so you can see where I'm getting this from. Look. So I go to SPY, and this is the chart.
Okay,
SPY. Now let me go to 1 hour so I can look. So you see it now? You see the head and shoulders? Right
so
here.
what time of day were you able to finally get in on this?
So let me draw. So this line was right here, right?
It was 11. What time of day was that? In terms of
let's see.
New York, in terms of EST, what time is that?
Yeah, right here. 8:30. So that's the next day.
Wait. 8:30 this morning?
No, this is May 26th.
Well, okay. Well, I'm trying to say it's 8:30 Eastern Standard Time.
Central.
So that's 6:30 or 9:30.
I mean, I'm sorry. What am I called again? CST.
Right. So that's 2 hours later than EST, right?
1 hour later.
1 hour. So 8:30 is really going to be
9:30.
9:30.
Yeah, not. So this is when the market opens for me. 8:30. When it opens for you guys at 9:30, it opens for me at 8:30.
So you were getting on the open then, on the opening candle?
Yep, you're getting on the opening candle.
Okay. Because you know that opening candle is a lot of whipsaw going on.
This candle right here. This hour right here.
And well, yeah, and if you look at the 5-minute chart, it's up and down like crazy.
Let me go on the 5-minute.
Can we see the 9 in May?
Hold on, let me move this line over so I can keep my place on this candle on the hour. And yeah, I got you on the 9.
I'm just curious, that's all.
Yeah.
Oh, okay. Decent.
And then go to, you said 5-minute. So here's the 5-minute right here.
Okay.
So you see right away.
9:30.
Okay, show me 9:30. Yeah, 9:30 your time. Yep, 8:30 my time. You see it?
Also, that was just a straight up. That was an unusual day. I remember that day now.
Mm-hmm.
Yeah, that was a very unusual because it was out of the gate and it went straight up. That's true.
Mm-hmm.
It never turned around.
It never turned around. So that was already from the previous day. You had your confirmation, and then you see how it opened up near the highs of the previous day, and it basically opened at the highs and kept going. So that's already showing you it's a trending day.
Yeah, that was a total trend day.
So-
And I was like, what, like 3 trend days in a row that week?
Yeah. So
Yeah.
whenever you have a trending day, you can hold your options. If your day opens up higher and it keeps going up, then you can hold your options. But if it opens up in the middle of the previous day's range, then it's probably gonna be choppy and you want to get rid of it quick for profits.
Mm-hmm.
So that's what happened that day. So therefore, this is why this is such a good setup. It's an inverse head and shoulders. And the main thing is you just gotta wait until the neckline, because the other thing too is that this doesn't always reverse to the opposite side. Sometimes it'll come to the neckline and then it'll come back down, which is why you just want to wait until the neckline to see how it reacts at the neckline, which would be right here.
So this is like a 5-day chart pattern.
Yeah, this is multiple
6-day
days.
chart patterns. You have to watch over 6 days to see this form.
The main thing is, yeah, you do gotta watch a couple of days, but like whenever you see a formation of a potential pattern, you just kind of gotta see where it's gonna go and where it might end and where it might continue. Let me take this off. But yeah, that's one. The other one I wanted to show you guys was, let me go back to this. Okay, this is another one. You guys see my screen still?
Mm-hmm.
So this is another one. This is a PCG trade I made back on the 27th. And I remember I made somewhere around 200% profit on this. And it was just the way I entered it. So you see these colors right here. So this is the Fibonacci retracements. And Fibonacci retracements are good for you to know whether because first of all right, if you want to enter safely. A safe way to enter on the trend is on the pullback. So number one, you see the trend is going up, right? But you don't want to enter. You don't want to just see it up. Oh, it's going up. Let me enter right here. That's not how you want to do it. What you want to do is you want to wait for a pullback for a safe entry. So what I'm using right now, as far as my indicators, this yellow line right here, that's the 9-day MA, 9-day moving period, right? So what my simple strategy I showed you guys is, once you get a candle close above the 9 MA, that can be a confirmation to enter the direction of the trend, and then you want to get out by the time you close underneath that trend, right? You guys remember me showing you guys this? Anybody?
Yeah.
You guys remember this simple strategy? Well, if you don't, just type in 9 MA, 9-day movement period, and then is a simple strategy just to watch whether the candles are closing above or below it, right? So my confirmation is I wanted it to bounce off the 9 MA and close above it. It did that. You see that? It did that. The second thing was I wanted it to close inside this green. I wanted to stay above this green cloud. Those clouds are EMA clouds. So the bottom of the bottom of the cloud represents the 50-day EMA. And basically, I just want to stay inside the cloud. And then the fact that you see this level right here, the 61.8 level, so when you use the Fibonacci retracements, good levels to buy that are buyable pullbacks are the 50% level, the 38% level, and the 61% level. When it bounces at these levels, most likely it's going to pull back and continue. But once it breaks that level, let's say it kept going down lower, oh, guess what? It's probably going to keep going lower. Does that make sense to you guys?
Mm-hmm.
So this is why people use the Fibonacci's to know to what degree and what levels are good levels to buy from. So it bounced off that, right? So now let me go to the actual chart so you guys see how it played out. So this is
Also, Joseph, another thing about the fib is that if you know which level it retraced to, you can predict where it's going, because the 0.6 goes to the 1.8 or something, and the 0.1 goes to, each one goes to another correlating fib. When you go ahead and put the next fib on the chart, you can tell where it's going. So you can predict the endpoint based on the fib too. Have you ever shown that?
I haven't seen that. I'll definitely look into that.
That's
really interesting.
powerful, because someone was showing me exactly where the NASDAQ was going to go based on the fib. And they were right almost to a T, exactly where the NASDAQ was going. at the end of the last, like, I guess, January, based on the fact that it had retraced down to the 0.6. And so
Mhm.
therefore they would just keep on placing the fibs and say, so that means because it retraced this much, it's going to go this high. And they could actually tell where it was, what the endpoint was.
Mhm.
So I thought that was a pretty useful way to, to be able to predict the future, which is always an edge,
It is. Yeah, because I know this is Fibonacci retracements, but I have seen people use the Fibonacci extensions to see different potential places where it could go, but I haven't really gotten to that. So that's pretty cool.
Yeah, that's what it is. It's Fibonacci extension. Yeah, worth looking into. That was powerful, I thought. It was a great
Yeah.
predictor. I guess because the market follows those patterns like crazy.
Yeah, it really does. And because we believe they do, they do.
Exactly. It's a
Mhm.
self-fulfilling prophecy, right?
Yeah.
Yeah.
Exactly. So yeah, so that example I was showing you guys it was PCG, and I think it was 27th. So April 27th was right. And I think it was on the 15-minute, I think. 27. Let me look back real quick. April 27th, 15-minute, 2 green candles. All right. And then the red. April 27th. So right, green and red. Somewhere around. I'm just trying to orientate myself. Let's see, 12, 15, 12, 15, 12, 15. So just right here. Must be right there. It has an inside. It's an inside one and then the red. How does it look different? I don't know why it looks different, and I can't orientate myself to what I took a picture of. But I'm just gonna just show you another example. The point is,
Can I give you those numbers? I think it's really a powerful thing. I want you just to look at it and see if you could bring it back to us in a more teachable manner than I'm sharing with you right now. But I think it's really cool. Do you want to hear the numbers about the fib extensions, where they go?
sure, but actually, I only have about 1 minute, so that's
Forget it.
yeah,
Okay, no problem.
yeah. So I guess I might as well end the lesson here too.
Okay.
Yeah, but I'll continue this next time more, and tomorrow's the paid class. So those of you guys that are interested, reach out to me, and thank you for coming tonight.
Thank you.
No problem. See you guys.
Thank
Bye.
you.
Bye.
Bye.
Good night.